So we're working on all of these programs. This is essentially what technology policy looks like in a nutshell, to drive up the cost of fossil fuel through robust regulation, and then incentives to move technology to scale. New technology always must follow this curve, and this is essentially what we do in a nutshell. And we have these councils of advisors. So this is a program of, by, and for the Chinese. With the Packard name, we were able to pull together a high-level ministerial group from state council members, from National People's Congress chairs, and so on. Okay, just one sec. And with that high-level attention, the central government is now doing a lot in order to get ahead of this energy crisis. They've set an energy efficiency national target now that if they can achieve this by 2010, the entire nation would be 20% more energy efficient. This chart shows us what happens if they don't make it. If China, by 2010, gets 20% more efficient, and then they repeat that again in 2015 and again in 2020, we can hold China's global warming pollution to 1.4 Americas. If they don't, and in fact reduce their energy growth just to 7.5% from 11 today, we'll be looking at 2.7 Americas worth of global warming pollution. It's a daunting prospect for a global climate. But they're doing it by implementing energy efficiency. The 1,000 largest enterprises in China now have signed legal agreements with the central government to become 20% more efficient. And we're working with those subset of those enterprises to demonstrate some best practice, energy auditing, benchmarking to international practice. Fuel economy standards, something our program's very proud of. China now has efficiency standards for vehicles 20% more rigorous than in the United States. Energy efficiency power plants. You can do energy efficiency on utility scale. The Asia Development Bank was investing $120 million. They wanted to build a new coal plant. And so here in this room, we have Natural Resources Defense Council and others came together with the Asia Development Bank and said, wait a minute, instead, let's put that $120 million into modernizing and upgrading the technology in the area where that plant would otherwise be built. And they were able to save the amount of energy that would have been produced at a quarter of the cost. So China's cheapest, most available energy resource is its energy waste. And to upgrade the technology that consumes energy, that's modernization. And that's something that the philanthropic program is focusing in on. And the National Renewable Energy Law, we'll hear from Dr. Schur about this in a moment. 15% of all energy is to come from renewables in 2020. And so far there's been about $2 billion of new investment in wind technologies, and solar is ramping up, and biomass is ramping up. So there's great promise in China, and there's ways that philanthropies can get involved, help China develop the policies that shape the markets so that companies can make money in energy efficiency and renewable energy. Thank you.
Thank you. Good afternoon, and it's a real pleasure to be here today. I think the question that lays ahead of us is a tough one. Do we really see a way for the developed West and the developing East to really cooperate in securing tomorrow's energy needs without at the same time accidentally destroying our planet? So on the one hand, we have the Western nations, the US, Japan, Australia, who has gone through the economic development process, and whereby they have virtually over the past century enjoyed energy that was a lot freer in terms of cost than it is going to be in the future. But on the other hand, you see countries such as China, whose economies have grown and liberalized at incredible speed over the past decade, and who do need energy and other commodities to continue to expand and grow, as all of you saw the recent GDP stats that came out on China. As you can see from this slide, China right now, in terms of that commodity demand, whether it's in coal, oil, gas, or steel, China ranks up there as one of the largest demand consumption, if you will. On the other hand, as you see, over the past 2 decades, as China has grown, on the left-hand axis, you see the annual GDP growth in the red, and on the right-hand side is what we normally term energy elasticity. You see that the energy intensity in terms of the ratio of consumption as it relates to GDP, prior to 2001, even though energy use was increasing, it did not exceed the rate of GDP growth. So in other words, it's natural to expect for China to continue its energy use because there is a very strong correlation to economic development growth. However, since 2001, the rate of energy consumption has increased substantially, as you see the ratio inverse. Key question is going forward, will that rate of intensifying energy consumption continue along the same paths that we have seen, or are there some common solutions that we need to work on in terms of finding some solutions to lowering energy demand? So can there be any common ground between the two worlds? On the one hand, economic growth drives energy consumption, but on the other hand, competition for these energy resources is inevitable today. China is competing for these resources with not just the industrialized West, but also with other emerging markets such as India, who's also enjoying breakneck economic growth. I'd like to offer just a few themes that I'm sure we'll touch upon when we go through our panel. And one of those themes that one often hears now is the theme of energy security. For decades, governments worldwide have really pursued energy security, and we see no different in terms of China's recent activities over the past year in terms of trying to secure their own resources in many different parts of the world. Well, the theme with energy security is oftentimes countries talk about energy security as a code word for cheap energy. So in other words, how does China continually find new sources of supply to fuel its growing economic engine? Secondly, the issue, however, is that cheap energy is very hard to come by in this day and age. And the thing that we have to keep in mind is commodities prices nowadays are linked to global commodities market prices. And so ultimately, it really does not make a difference if you own the mine, the well, the pipeline, or the wheat field, because if the price goes up somewhere, it goes up everywhere. Now, in the case of China, because prices are regulated, and the government has been trying to protect its ability to secure the resources and power its economic engine, prices being fixed the way they are, regulated, has artificially created a scenario whereby consumption is actually artificially boosted at a high level. And so as you can see from the last slide I have here, just take one example of world retail gasoline prices. Now, as you would expect, on the left-hand side, you see many of the European countries where the cost of gasoline is actually heavily taxed, and such that it's actually quite expensive to use. You see the US somewhere in the middle there, and what was striking when I pulled together the numbers is China's all the way on the right-hand side there, and you see just how cheap that gasoline is. One of the key the reasons for that is in China, gasoline is not taxed and it's heavily subsidized. So with that, I'm sure we'll talk a bit more in terms of the energy supply and demand situation. Some of the things I'd like to offer is with Platts, we're a global leader in energy market information, and what we've learned is countries, the best way to deal with the supply and demand pressures, if you will, a lot comes down to market transparency and liberalization of open markets, where price can actually, as the right indicator, high prices will hopefully direct the right kind of investment into the right kind of alternative energies, into the right kind of long-term infrastructure, and at the same time, hopefully send a signal to lower consumption. So with that, thank you.